the bottom price we had for the NASDAQ was 886. That's the bracket we're in just now, is the 886 to 0600 bracket, right? That's the bracket we're in. So when we see that that's the bracket we're in, and we came from 15,886 to this price point, it's not a surprise. In fact, we talked about it this morning. We said that we would look to try and get this up to the 16 and 60 price bracket. So when you look at where we came in from in that trade, guys, there's your level. That's the level that we've just been talking about there, 886. Look, the upside is, it's just staying in that bracket. Now, some people might say, but why is that important to us? Because this is what the dealers do. They trade, this is their bid price, and 16,060 is their offer price, right? Think about it. If I said to you, here's an example. This is going to make it as easy as anybody can ever make it, right? If I said to you, and here's the example, that we have a Fed target rate. We have a Fed target rate of, for argument's sake, 500 to 525 basis points. Okay? So if you know that the Fed target rate is 500 to 525 basis points, where's your bid and where's your offer on that trade? 0 and 25. It's not that difficult, is it, Miguel? So we know that there's going to be a bid at 500 for yield. You know, so obviously you're going to be looking at 500 and saying, well, it's going to go up here, so we're going to sell bonds. So you're going to offer the bond when it's at 500 basis points, and you're going to bid the bond when it's at 525 basis points, aren't you? Oops. Yes? You're going to bid the bond when it's at 525. So in other words, you're sitting inside that bracket. You're sitting inside a bracket. And that bracket is something you can now look at and say, there's a hard bracket bid and a hard bracket offer. Because if we go outside this, and this is a great example, because if we go outside of this, it becomes what? Well, assuming we're trading Fed funds futures, it actually becomes an arbitrage at that point, doesn't it? It actually becomes an arbitrage because you're outside of the Fed funds trade, right? It's outside of the range. Now, you might be wrong. You know, there's obviously a reason why it's gone outside the range. Perhaps everybody thinks it's got a massive chance of going up by more than, you know, whatever it goes up, or down by more than whatever it goes down. But if it doesn't, and the Fed funds is accurate enough, you're going to basically trade those brackets. So the brackets are incredibly valuable to us. So the 886 from this morning up to 16,060 is absolutely special here. 886s. And obviously, yes, we've came off 980s because the short-term value has changed and it's gone sell side. Remember, we're sticky top lines, we're sticky top edges, and that's a top edge. So we're sticky top edges. The oil's gone bid as well, guys, so there was no trade. We've gone all the way back up to an offer price at 775, wholesale price levels. I was watching for a short-term dip in value there, but haven't seen it yet. The only trade I've got on just now is a short bond. We're making quite a lot of money actually in that because we got some 10s and we got some 30s and we got some ultras. So making quite a lot of money on the short bond. And obviously, short bonds, long oil makes a bit of sense because you're trading an upside and an upside at that stage. In inflation, of course, as oil prices go higher, bond yields expected to go higher. So that's kind of what's playing out just now. As I said, kind of like the equity top edges. I think that's working out. Nasdaq's gone offered again for a second time. S&P's testing the 4537 level. And just completely got annihilated at the top edge there. So very, very easy short on the retest there for that sell coming off the 37s. So that's kind of nice. That's kind of nice at this stage. Oil, well, we got all the way up to the offers, so we were a little bit wrong in where they might take the offer, but that's because the short-term value kept improving. and it just came up to the next offer price level here. So all we do is we extend that out. We obviously can, this is a scenario. So you can see that the next scenario was this one, and the next scenario is going to be this one. It just extends out to the next offer level. It just extends out, and you can see that those two prices eventually cross over. They just cross over, don't they? So there's your short sell at 75s, and there's your short. Well done, anybody that's clever enough to figure that out and get the short sell on. So well done. I like your style. And obviously, how did you recognize that trade in the first place? How did you manage to recognize it? Because of the big arrival of orders here. With a big arrival of orders, you can recognize that the value hasn't improved. Yes? So if the value hasn't improved, the big arrival of orders is now going to put you into a held offer, isn't it? So this is going to be a held offer here. It can't be a bid, so it's got to be a held offer, right? So it's going to be a lower held offer. So you're going to be looking at that lower held offer. You're going to try and figure out what that trade is at that stage. And what is it? Well, it's obviously got a bottom print here. It's got a top print here. So it's not a measure, but it was getting close to getting into that type of area. The measure would have started around about 87s. It traded at a high price of about 82s. So it wasn't that far away from a measure. It wasn't that far off the numbers, was it? So you just let it go, guys. You just let it go. If the value is coming in on the offer, you let it go through. If the value is coming in a bid, you let it go through. So in this case, the value is still coming in, divergent into the measure kind of areas. And it was an offer price, and it was the right time of the day. As you know, this is where the right time of the day is. This is where your exit decision is going to be made. And we did warn you about the exit decision. So that was a good matrix trade, wasn't it? Good matrix trade. So well done, guys. I like it. I like how you're thinking, starting to figure this out now. Nice sell side trade there off the top edges at 982s. We started to see some trade coming in here, getting jammed a little bit, but I still like the offer at that point. The value looked very, very good for the offer coming in at that price. A little bit surprised that it didn't continue to extend. So obviously there's a buyer in here. That's pretty obvious. So there's a little bid area just in here. So obviously people getting a little bit concerned about how far this could go in this phase. And I think a lot of people obviously booking profits on the high volume there, taking the price back up towards this balance again. And then they'll try again. They'll try it all over again. 10 years still looking very offered. So I'm still looking at that as a negative for equities at this stage. 10 years still looking very short at higher prices. So as I said, that's still, for me, looking at that still looks pretty bad for equities at this point. Looking at the S&P, you can see that value is still diverging off the 4537s. S&P looking to, try and work back towards perhaps this baseline here. And, we've obviously got the change of behavior in the background here as well. So that's something to pay attention to. So it looks like we may well get the press here from the 35s down to this 4532 price. Lots of stuff happening just now, isn't there? Lots of interest, lots of activity just now. It's one of those liquidity days today, guys. One of those days.